Hello friends, welcome back to my channel. This is your Srikanth, and today we are going to discuss the last strategy in our series of options trading simplified module videos. So the last strategy which I am going to tell you is a special one. Why? Because this strategy is applied on expiry days. So on expiry day, if you apply this particular strategy, there is a fair bit of, I would say it's not fair bit of, but there is a huge probability that you will get the profits. So that's why this particular strategy which I am going to tell you is a specialist for expiry days. Expiry days means on every Thursday. On every Thursday when we are ready for the expiry of Nifty and Bank Nifty. So on the expiry day, this strategy really works very well. So let's go straight away into the strategy. See, till now I have explained you what is OTM, out of the money, what is ATM, at the money, what is call, what is put, who is an option buyer, who is an option seller, what is a spot price, what is a bearish, what is bullish. So all these things you have learned till now, right? So that makes my job very much easier to tell you about this particular strategy, because already you know what is ATM, what is OTM, and how to select the strike prices, when to select the strike prices, on what scenarios you have to apply the strategies. So everything you are aware of now. The only thing that you are not aware of is the strategy, which is a specialist for an expiry day. So let's go and see what this strategy is all about. So guys, the strategy's name is Iron Fly. Right. It's Iron Fly. So use this strategy for expiry days. When I say expiry day, today is 10th of November and tomorrow is an expiry. So today at 3 o'clock, that is on 10th at 3 p.m. because typically the market closes at 3:30, right? So we will take this strategy at 3 or 3:05 p.m. the previous day of expiry. So you have to execute this particular strategy on the previous day of expiry at 3 p.m. Alright. So now what this strategy is all about. You have to buy out of the money put 300 points away from the spot price. Means market is at 18,000 levels. Nifty is at 18,000 levels. Now you have to buy a OTM of which is 300 points away from the spot price of 18,000. At the same time, you have to sell the put option of the particular strike price which is ATM 18,000. Similarly, you have to do for call also. So actually this particular iron fly will have four legs. When I say four legs, you are buying a put option, you are selling a put option, you are buying a call option, you are selling a call option. So four legs of option trade happens in this particular strategy. So now to get the benefit of the margin, means if you want to do this strategy at a lesser margin, lesser capital, first you need to buy and then you need to sell. Okay. So let's see a video on how to execute this particular strategy. So Nifty at same 18017 18,017. So at the strike price is 18,000. I selected 11th November because the strategy is for the expiry day. So 18,000. What I have done? I have selected 18,300 points away. Put I have brought and 18,000 put I have sold it. Similarly, again 18,300 call I will buy and 18,000 call I will sell it. So overall you can see the margin, the funds required is only 50,000. So what is the maximum profit I am anticipating? A 5,873. Market from 17,882 to 18,117. So the range could be very small, but as it is an expiry day, we can expect market not to move more than 200 points either side. So this special strategy which I told you is very helpful for you on an expiry day, and the probability of profit is also 43%, and the percentage of return that you might get in this particular strategy is 10% of your deployed capital, which is very good. On a given day if you are getting 10% of your capital, that's a very good strategy. So you can apply this strategy and you can get the benefit of this strategy on a day called as expiry day, which happens to be on Thursday of every week, and you have to apply this strategy on Wednesday at 3 p.m. or 3:05 p.m. Understood? And to get the benefit of the margin, first you need to buy the options and then you have to sell the options. The best way to do it, take an account in Sensible, and you can you can link your broker account in this, be it Zerodha, Angel Broking, Upstock, IIFL. You can attach it and then you can execute your trades directly from here. So this is how it is done. And here you have an option to select the ready-made strategies which I already told you, and you can select it, you can execute it, and you can see it. But having said about this particular strategy, I would like to reiterate that this strategy you can implement it post discussing with your financial advisors or post doing your analysis. Don't blindly go as I told you to take this strategy. This is only for educational purpose that I am telling you guys. So you can consult your advisors and then you can go ahead and take this strategy. But from my experience, I can tell you on an expiry day, this strategy is going to work like wonder. Okay. So that's all guys. So we have covered all the 5 strategies. So there are so many other strategies also in the market. It's not that we don't have strategies available in market in options. We are going to cover that one by one, because this 5 strategies which I told you in option trading simplified module 1. This is module 1. Then we would be coming up with module 2, wherein we would be discussing about another 5 topics in strategy building. After that, we would be having so many things that we need to learn in option trading, like your option Greeks. We will learn about option Greeks as well in our coming videos. You would learn about theta decay, you would learn about gamma, you would learn about implied volatility. So all these things you will learn slowly. But on a day-to-day basis to do your trading, very precisely and in a very structured manner, these 5 strategies which I told you till now would really be helpful. So slowly, once when you earn profits and you want to go ahead in market with larger capitals, whatever videos I would be uploading subsequently in options trading would be really helpful for you, because you will understand how an option premium actually decays, or how an options premium actually increases, and why it decreases and why it increases, at what times the volatility will be higher, at what times the volatility will be lower. All these things you will come to know in the subsequent videos. But in this series, the first series of videos, the next and last video that we would be doing would be to analyze a support level, a resistance level, how to draw that in a particular chart is what we are going to learn. Okay. I hope I made it very clear about the particular strategy, and if you like it, please do subscribe my channel, suggest it to your friends, like it, share it, and please don't forget to mention your questions or queries in the comment box, because I would be definitely be interested to answer those. Okay? So thank you guys. Thank you. See you again. Bye bye.